Good morning, traders. Welcome to November, the one before last month of the year. And we are ready to get hit by an overexcited tennis ball machine. I imagine being on the tennis court and the tennis ball launcher going out of control. That's how I feel for what's going to happen for the rest of the day. We are going to really start November with a bang this afternoon on the US side. But first, let's look at what's happened overnight, what's happened yesterday as well. Now, first of all, the headlines. There aren't many. There isn't many going on today. Okay, the geopolitical side is still something that we need to keep a very close eye on, and things are still bloody over in the Middle East and even in Ukraine as well. But it does look like Israel wants to keep the conflict local right now. The worry in the Middle East is still for what the country is going to do with US bases and stuff outside, but I'm not really wanting to expand too much on that. But for us traders, it's still something that we need to keep an eye on because it makes the market move. Grüße Konstantin, Österreich, yeah? Right. First of all, China. The PBOC actually drained a little bit of liquidity overnight, and at the same time, they are keeping their fixings ultra conservative, as we have noticed for a month now, at least, or a month and a half. Still fixing below 718, where the market is trading above 730 on the dollar CNY, and the dollar CNH is trading close to 734. But they are still showing that they want to keep the whole thing under control over there. But today, likely on that side, the dollar side is going to take over. In other news, Biden and Xi may be meeting during the APEC summit next month. So that is something that if anywhere closer to the event, we get more comments, and Yellen already commented a bit on how they would like to keep China a little bit closer than what they have done for months. But on the other side, they are still putting more restrictions in place on Chinese products. So it's a give and take there. Tug of war between what they give and what they take. So for the time being, that's not going to change too much to the Chinese situation as such. And if we run through the numbers, we have seen that the Chinese manufacturing PMI dip below 50 again earlier during the night. So that is keeping clearly the Chinese yuan on the defensive right now. But that's one for the diaries. Then just Peter B, has the lunchtime session changed UK time? No, we changed UK time in last weekend, so that's why you may think the flow show changed time, but we always do the flow show at 10:30 a.m. London time, so that's a fixed time for the European listeners among us. So that time doesn't change, Peter. Right, then over to, and before I move over to Japan, let's quickly have a look at what's happened in Kiwiland last night. We had a bit of a weaker employment report. The participation rate came lower where it had been revised a little bit higher before. The unemployment rate ticked up a little bit. Labor cost index came down a little bit. All of this may have seemed to put pressure on the Kiwi dollar, but the pressure that we saw actually, especially on the crosser side of things, has been very shallow. We had a little bit of a jump in those crosses in the Kiwi, a little bit of a weaker Kiwi dollar, but some of it has been reversed already, and I'm going to take a closer look at that because myself and a couple of people in the room have been scrutinizing those Kiwi and Aussie crosses over the month end, and I'll expand a little bit on those when I will look at the beautiful pictures of mine. Right. What else do I have? Well, actually, we can move straight over to Japan because there the comments have clearly moved up a notch. The Japanese officials, the main ones, Suzuki and Kanda, were very vocal overnight. So, and the most vocal one was actually Kanda. Suzuki said that the FX moves are not in line with the fundamentals, but then Kanda came up with a whole speech saying that they remain on standby for intervention if needed. He's not going to comment on what the Bank of Japan has been done as doing yesterday. Then he said the current moves in FX cannot be explained by fundamentals. The sense of urgency has increased, and he's concerned by sharp moves in the yen, and it doesn't rule out measures against FX moves. Okay, but then the big kicker here is that he said the biggest factor behind the FX moves is speculation, and we all know what that means by now. Speculation is really the word that the market is looking for when we are on the outlook for possible interventions. And we have reached that stage, clearly. So yesterday as well, I was saying that the move that we're seeing, if you take the low behind before the Bank of Japan, and then the high that we printed afterwards, it's about 270 or 260, 270 pips. Recall what Kuroda was saying when he was still governor of the Bank of Japan, and he said that moves of 200 to 300 pips a day are seen as excessive. All right. So also yesterday, the Bank of Japan already made a bit of a comment that they are still watching FX, but that has been taken up for 2 or 3 months now, or 2 or 3 meetings in the Bank of Japan statement or press conference. But we really need to be now just getting ready in case we see a move higher again in dollar yen today, which is not in line with the rest of the dollars. Then I reckon we really should be worried about the interventions. They can happen at any time in the day. And looking at the avalanche of US events and US data to come out, imagine if they are better, and then that sends the dollar yen to 152 or above. I think then really it's going to be a case of being very, very concentrated and very ready for interventions. We are now at that stage where they can intervene anytime. All right, so that is something to keep in mind. There's a few comments, and again, it's easier for an ex-Bank of Japan member to comment than when they are in the seat. But one of the ex-Bank of Japan members made I'd say a pretty fair comment in saying that the inflation overshoot, and which may still continue, and even the level of the weak yen, this combination may push the Bank of Japan in starting to normalize policy a little bit earlier than next year after the wage negotiations, which is what Ueda is still hinting at, although it was not that clear over yesterday's Bank of Japan meeting. But I'm starting to think that, and again, it may be seen as a bit of a panic move if they start to react on monetary policy on the basis of the weakness of the yen. But it is a factor. Remember what the S&P has been doing for months and months. after what the pandemic hit, after inflation started to move higher. They clearly just bought Swiss franc. Because one of the reasons was that buying Swiss franc is combating inflation as well. So if you take it from the opposite side, and if you are a country which has not yet started to normalize monetary policy as such, they tweaked the YCC again yesterday, but they did not do anything about the monetary policy side of things. It may be a factor playing behind it, and they may use it as some kind of an excuse, and I wouldn't even be surprised now if they start to normalize a little bit earlier than what we as a market are now expecting, because UEDA, let's face it, has still been going at a snail's pace compared to any other central bank out there. So that for what's going on in yen. What else did we get yesterday? We had a bit of a disappointment on that Canadian GDP, which is keeping the dollar Canada pretty big. This is one I'm going to look at today as well, especially on the back of those lower oil rates and things as well. We do have McClem and where is it? McClem and Rogers out tonight as well. That's on the docket. So watch out for those two if you're in the Canadian dollar. He has been changing direction of the boat a little bit of late. Okay, he was pretty hawkish until we saw the Canadian data starting to turn a little bit, and gradually, he's turning a little bit, let's say, unhawkish right now. He's more or less on the basically coming to where most of the other major central bankers are, that is purely data dependent. Okay, we had a bit of a house price index over there, but then where are those numbers? We had some quite surprising housing data out of the US, where we were supposed to see slowing down housing market. It hasn't really materialized in the last set of numbers. We do have the mortgage data out in a bit as well, I think, today, but that's not going to be the big mover of the day. The employment cost index was supposed to stay where it was, but it really ticked up just a little bit there. It did set in the recovery of the dollar yesterday, so I think it had still more to do with end of month, but it was a pretty decent excuse for the dollar to start catching a bit again when once that came out. Now, what else did we have? We had a bit of manufacturing PMI here out of Japan, well, hanging around the prior data. That's not going to be the big market mover. We had pretty weak buildings approval out of Australia, in line with the rest of the dollars. Australian dollar has been coming off a little bit, but it hasn't really affected the Aussie dollar versus US dollar, because Aussie dollar and Kiwi dollar, as I already said and will show, have made a pretty decent recovery against stuff like Euro, Swiss, and stuff like that. Yeah, we had the nationwide house price index in the UK coming in surprisingly stronger than expected. Those housing price indices were going down of late, so now we had a little bit of a revival, which can be comparable to what's happening in the States, for instance. Those numbers are pretty up and down right now, and I do think that we are going to be more seeing yo-yo moves in those prices. So they can become really a driver for us, but then they need to really keep one direction going and not really do a yo-yo, because then the market is going to ignore most of them. Swiss PMI came in much weaker than expected. This is the manufacturing PMI, much weaker than expected over there. But as we know, still, I mean, the services PMI is likely still the biggest thing that is watched over there. But yet, it is keeping the Swiss franc a little bit on the defensive right now as well. Swiss franc, which has been the major loser over month end, and I will show where we are because we are at the pretty interesting levels on the Swiss franc there as well. Manufacturing data out of Norway also keeping the Norwegian kroner in check. Then we had the sterling manufacturing, UK manufacturing PMI coming in a little bit weaker again than expected. But again, in the UK, the services are more important than the manufacturing for as a market mover. It's not that this is not important, but it is more important on the service side as a market mover. Okay, next, get ready because this is going to be a day where the dollar can move quite a bit. It's not even taken up in here, but one of the bigger market movers of the day can be that US Treasury announcement of what they want to do with their bond issuances. Okay, we have already seen that they are going to it's higher than prior and higher than the past quarters as well. Their refunding needs, but lower than the expectations, which then as at the time of the announcement set a little bit of pressure on the US yields. But today is going to be an important one because they are going to announce the selection of what bills, notes, bonds they are going to prioritize to fund their needs. And as we've already been mentioning, there is a real possibility that they are going to prioritize shorter term bills now versus the longer term notes and bonds. So, and that would be a change from what they did last quarter. All right. So there's going to be two things. If they really prioritize bills in a massive way, we're likely going to see the short end of the yield curve yields push a little bit higher, depending on, of course, the other data that we are going to get. But let's take this one alone. What it may do is invert the curve where the inversion is still to be applied, like for instance the 2s and the 10s. It may widen the inversion a little bit. It may weigh a little bit on the 10-year yields and keep the 2-year to the 2, 3, 5-year up to 5 or perhaps 3 years, depending on what they want to do. Keep that one bid and then invert the curve a little bit more, which in turn should mean that it's a little bit going to weigh on the dollar because the market doesn't like curve inversions as a base rule. Right, then what happens if they don't? Well, that's going to be the saloon door of the day and likely the bigger mover because that will be the surprise. If they keep it as they did and still, or even do it on an even basis, keep the notes and the bonds compared to the bills on an equal level or a higher level, then you're going to see that the 10-year up to the 30 years, starting 7 years probably, starting to shoot again, and the curve invert even less, or go into a expansion again, and that would normally be bullish dollars. All right. So that's for US Treasury. And then we have all the rest to come. We have the ADP. We've seen that it is a, well, it's to the year. It's volatile, but we've seen the last two reports coming out as a bit of a negative, but then saw positive revisions, which was the opposite of what we saw before. So that's a bit of a lottery. It should not be telling us what the NFP is going to do, but we know the markets, right? They are still going to try and clutch onto a straw. So that may move around a bit, but that's going to be 15 minutes before that US Treasury announcement. So this could be just a 5-minute algo blip, and then we wait for what the Treasury wants to do. staying in the US, okay, we are going to have the manufacturing PMIs. It's expecting just around, is that already the final number, or let me just, yeah, that's the final number. So I think the market is going to move over that one very quickly. Then we got the ISM, okay, and the ISM is probably going to be a bigger mover than well, it is going to be a bigger mover than the S&P manufacturing PMI, and that comes out at the same time as the euro. So around this time of the day, you should really see some decent moves as well, especially if they go in the same direction as what the U.S. Treasury may have announced. So, assuming that the U.S. Treasury announces more bills than notes and bonds, if you get a weak one here, that could really weigh a little bit on the dollar for the rest of the afternoon, ahead of Jay Powell. If in turn we get a better number here, and then the U.S. Treasury bills, that's going to put a bit of mess in today's markets ahead of the FOMC decision. So in the meantime, we also have like Jordan speaking, and we know that they intervened a lot in favor of the Swiss franc over the past months. By the way, early next week we will have the intervention numbers for October. My best guess is that they did not do anything in October. And looking at how risk has traded and how Swiss has benefited from the risk, I would not even be surprised if those people were on the bid somewhere in the low 94s in the Euro Swiss, for instance. Okay, then we have the Canadian manufacturing PMI, which is okay, it's going to drive the Canadian dollar a bit, but I think it may just get swamped in all the US dollar violence for the rest of the day. We're having the Mexican manufacturing PMI as well. I'm going to have a quick look at that because Euromex is on interesting support here. You know, I'm always keeping an eye on what's happening in Mexico. Yeah, I'm coming. I will do that. Mr. A. I will look at your comments in a few minutes. All right. And then we are going over to the FOMC. It's All Saints Day. I don't know if Mr. Powell will be a saint or not tonight, but unless there is a surprise, and this is my base case, okay? It's just my personal case, my personal opinion. Don't take it for granted or wisdom or anything. I think the Fed is on autopilot right now, despite all those data that we had over the month of October, where most of the data, most of the important data, if you look at the GDP, if you look at the some of the housing data, and especially if you look at earlier in the month, if you look at the last NFP, they've all been supportive for them to keep restrictive, to keep higher. But I don't think that in the light of everything that's going on now globally, I don't think that they will be tempted to hike rates today. I don't think at all. It might be for later in the year if we get another persistent higher labor report coming up on Friday. But I think they're on autopilot today. This could be, if anything, and we know that Jay Powell is very capable of walking fine lines or covering the whole spectrum of comments. He usually does. He usually does start with a bit of a dovish tone and then slowly moving into what is rather hawkish or vice versa. So I think this could be the non-event of the day, right? This is just my personal view because we will have had a lot to digest already before, right? So this is my play for today. I think that what's happening here before is going to be more important actually than what the FOMC may do. Now, I'm more than happy to be proven wrong on all of that. I'm still at heart a bit of a dollar bull right now because of the differentials, but I'm very cautious today because the U.S. Treasury can put a bit of a spanner in the dollar works. That may be the one that is going to be the bigger mover of the day, actually. So that's my view on what's to come. Okay, I guess we are ready to move over to what we are going to get. Change the screen share. Okay, so let's do it the traditional way, and you know that I'm always looking at what's happening in the options market when we go into major events. I mean, and I made a mistake in the room earlier saying that those would cover NFP. I'm a day too early for that. Of course, we're only Wednesday. Look at what the overnight is pricing at the money. Again, the options market is not overly ecstatic about what's going to happen for the rest of the day, even though we have a massive amount of data and events coming towards us. And remember what's happening over the past major events. I'm always looking at this. I'm showing it to you. And again, most of the time, okay, we had a bit of overshoots on those events, and then it came back into wherever you add those two up to where we are current. So this means that really in the options market, you should have supply above 106 and bids around 105 and below. And what happened over prior events? We had a test of one of the sides, and then it came back. Okay, so I mean, don't dismiss what the options markets are expecting. Okay, because they have been running the game of late and keeping us in the wider bands or the bands of expectations. This is your band of expectation. If you start to move outside, and this is going to be actually pretty cool today because there's big levels in the euro dollar, 104.80, 105 the figure. The other side, okay, we have seen it broken over end of month, but it came back with a vengeance yesterday. We've broken outside this 106 figure 15, and then we came back in it. So for the day, it's going to be okay. This one is going to be a pretty cool watch, because if you start to break outside 104.80 or outside 106.15.20, we probably will see an acceleration, because there's going to be much less of those option interests once you move outside of those expected bands. Okay, cable a little more volatile because your overnight sterling includes Bank of England, and actually considering what we are going to get on the on today's US side, and then tomorrow the Bank of England, I find this I find a bit of an interesting one, because 70 pips in the cable is something that can really easily be done. I'm going I'm tempted. I am tempted here to do something, perhaps one side or the other. But I'm tempted, because I think, and again, there, if you take into account that the 120.70.80 is a bit of a support zone, and you subtract that straddle sum from the 121.40, that brings you bang into that support zone as well on the cable. Right, dollar yen is an outlier, because there's much more intervention risk in here. So and even though if you look at the overnight dollar yen, okay, it's 90 pips wide, it's a bit wide, but still, if you only would prioritize one side, it's still not that expensive if you take into account that MOF can intervene every moment, really. Right, that for the options, and I guess now you guys want to know all the rest. Sterling differentials, you know, I'm watching this very closely, because it does make a difference on the FX side of things, on the cable, for instance. Okay, we had a bit of an extreme. We tested some trend line support, if you want to put a few lines on there, and now we are coming back into, let's say, the middle of the week range, week WEAK, okay, not the week as in the calendar, the weaker side of the range, because we're still below this level here at 25 BPs. That should move over the next 24 hours, 36 hours, okay? With the US data and with the Bank of England tomorrow, this should move, and cable will move accordingly. The EU side of things, and this could be a big mover actually today if the US Treasury decides to go much more on the bill side. We may see actually a bit of a widening here if the 2-year, for example, the 2-year dollar shoots actually on the back of it. We're also hanging a bit low. We've had this bit of a move over month end, but the month end was a bit of a strange one. You know, we've been talking, especially in the room, about how the last 3-4 European sessions really saw a lot of euro buying, euro crosses, euro dollar was really popular, a lot of buying, and then yesterday. It started a bit earlier, but then going into the European lunchtime, the whole thing started to reverse because the European buyers were done, and then the euro dollar and euro crosses started to reverse. So I mean, that is very typical of what sometimes happen in with the European money managers, asset managers, when they have their stuff to do. Once they are done, they don't have to rebalance that much anymore, and they might have already started to take the other side, and the market actually taking some of its due back because the European data have never been, and even this one has never been supportive for a much bigger move higher in the euro dollar. Watch what's going on here in today's afternoon, okay? If you start to widen more, that's probably going to put a lot of pressure on the 105, 104.80 on the euro dollar. If in turn this is going up, then the euro dollar could see some relief. But today, we have to be cautious with this one because of those US Treasury announcements. All right. Okay, and since everybody is looking, or not everybody, but since the people were asking me about the Swiss, let's have a look at the Swiss. Look, this is one that I've been posting regularly, and also other people in our room. The dollar Swiss, that's the daily, okay? The cloud, this is where I started to buy dollar Swiss the other day. I've let them go too early. I had just a couple of scalps in between, still in the direction of this move. But the daily cloud has been very supportive. Also into month end, we have seen that the Swiss franc in particular got hammered quite a bit. There was a lot of rebalancing to do in the Swiss franc. I think there's two reasons for that. There is one, that the Swiss franc outperformed all the rest because of not only geopolitical things, but also yields starting to find tops and stuff, and people were buying Swiss franc. But then there was a big rebalancing need as well in the Swiss franc for the end of the month. And we are on interesting resistance levels now. I know it's clearer on the short-term chart, but you will have to do with this one because otherwise we are here until the F.A.C.E show starts. We are on resistance here, okay? We are on the trend line resistance. We are on fib resistance, okay? Around this 91 figure 10. This is a good enough level to watch for what it does at the close. And yesterday we closed bang on it, and today we are shying away a little bit. And that is also due to what is happening on the Euro Swiss. Euro Swiss overshot the cloud, overshot the trend line as well into month end. But then we have seen towards the close that we were going that we are coming back closer to the cloud, and today we are back below, and it's all very nice. If you look at the dollar Swiss 91 figure 10, if we get a rejection, I think we can go back to levels in the low 90s. But if we close above 91 figure 10 today, is probably a continuation, all right? And Euro Swiss is going to be the same around 96 figure 10. I think it's less less clear than the dollar Swiss, because you got the euro side in it, and I'm not a big fan of the euro right now. On the other side, if it really starts to cap around this cloud, then the euro Swiss could come back to levels more around neutral levels, around the 95.5 again. If in turn dollar Swiss is so big that it starts to break above, then I think we may be going for those 96, 70, 97 the figure levels. But this one is less clear for me. Yet, if you look at it pure technically, look at where the close is today, 96 figure 10. That's really where it is at. Over to the euro dollar, I reckon this could be a decent mover today. There's a few things going on here. I think this 105, 65, 75 is your hinge for the day. We're trading a little bit below. We're coming on what people call the flag support here, around 105, 35, 40. There's a lot of levels very close in the euro dollar, but to me, there's going to be a couple of interesting ones. Okay, so if we start to move above again, then we are going to have to look at the 106 figure 15 again, which I remind you, that is where the option market looks for a top today. If you get through, then we're talking about this 35.50 again. This is end of month stuff. All right. I'd still look at this 106, 35.50 as being a very important level. Okay. On the downside, to me, the 105.20 is your 106 with your 106, the figure, let's call it the closest one. And then this one is, to me, very important, 104.80 figure. Also from the option side, it's going to be important, but also on purely support side, trend line, prior lows. We bounced every time that we came into this area, apart from this extension on the that was it. No, that was even before we had the NFP. The NFP disappointed here, just below 105 the figure. So it's going to be a level that people are watching here. Okay, 104.80 figure. That's going to be a major level on the euro dollar for this afternoon. Cable. Okay, I know it's a bit of a mess, but I can see clearly in my own mess, so that's important to me as well. We are around neutral here in the cable. We also went higher on the end of month, but we stopped short of 122. Okay, this is your level, I think, 122 figure 20 on the cable. And on the underside, it's what I spoke already about, 120, 70, 80. That's also where the option range lies. And that's, I think, is going to be your range to observe going into whatever happens this afternoon on the US side of things. And also, of course, going into tomorrow, Bank of England, take those two, this block together, and I guess that cable tomorrow is having a very good chance of trading outside of this zone. I need to take a look at, what happening in gold. You know what? I spoke about these levels, right? About 2005, 2012 on gold, and we're coming off from it. I think the situation in the Middle East is not thawing, but the market is sanguine, and when operations are targeted as they are right now, some people find it that they don't need all the protection anymore against the worst, and that's probably what's happening in gold. But again, U.S. yields can play a role here. Keep an eye on if gold comes back into that into the 1960s and the prior 1954, 55 level. Okay, so you've got about 40, 50 bucks inside which to play right now. If we get below here, it's probably going to accelerate. And then oils. You know, we spoke about that with Blake over F.A.C.E, and this 81.5, this 81.5, 83 zone. I know that Blake has marked it closer on his charts, but I think it's a bit of an equilibrium zone. It's been traded so often in the past. This is going to, I think, be an interesting watch, and we're closing in on it. Okay, we had this spike from it already yesterday, and uh, we're trading in the zone. So watch what's going on there. I've got this sneaky feeling that we may at one stage retest and go for a move back down below 80, but that's just my feeling. And that's based on the fact that in the height of the stress, we could not make it above 90 or hold it above 90. And we're coming back really fast. So we had those two fast moves higher. And now we can see perhaps an equal move here. That is 14 bucks. You take the 14 bucks away, it's gonna bring you back into this bigger support zone. Okay, it's just a possibility. I'm not saying it's going to happen, but it's a possibility. Maybe less impacted by all the data today. Okay, for the data, we more have to look at dollars. Well, the dollar yen, 152 is a resistance area on the longer term. And we have heightened intervention risk, okay? So that 152 is really going to be a big test and possible a red flag for what's happening later today if we get positive US data, US news coming in. So keep an eye on 152 on the dollar yen, all right? This is going to be important enough. And just remind you for the ones that are were with us already in October 2022, April, sorry, 2022. That might have been still when we were at Forex Flow with Ryan. I said, like, there's a big break here about to happen in the dollar yen, and this could go all the way up to 156. I wasn't wrong. Fell short, but I think it's still a possibility over time. But we will need to wrestle through interventions, I reckon, before we get there. Especially that Canada said that they are now on heightened alert. Okay, your first level will be on the downside 150.80, and then 150 low 150s. But if it's done via interventions, if it's not done on in a natural way, we're going to have to take a look at what the U.S. Treasury especially is doing today, and then I reckon the ISM. Okay, if in a natural way we start to get back down under 153 quarters, under low 150s, then I think the dollar yen may actually have seen a longer term top. Now, is it possible on the US data? I'm not sure. If we get even neutral data, I think the market is in testing mode now to see what the Bank of Japan, what the MOF, sorry, wants to do. If it breaks above 152, and then we have another level here up in the mid to high 152s, some extensions and stuff up to 153. Okay, but this is more or less a Ministry of Finance watch now. Euro yen may be more interesting because of the euro side of things. Okay, we've broken above the prior top, but we are back below. We went to have a look at the extension here. Do I need to put it on the weekly for that? So, as I was saying, 160.70 the other day is an extension, okay? Over month end, we rallied up there, and then we started to fade away, and especially starting to fade on Bank of Japan comments, but we started to fade away from this level. I think this is pretty important now. 160.70, that's your top side level, okay? What's happening over there is going to be important. On the way down, to me, it's still, I'm going back onto the shorter end. On the way down, it's still this box here. Once we started to move outside, we had one try and then another try. Once we started to move outside of this box, it started to feel pretty big. Keep an eye on 158.5. If it goes this time, it may just open the door up to a bigger correction. And I'm especially looking at the euro yen because I think the euro is about or should give back what it took over the end of the month, because this is not data related. This is purely end of the month stuff. EuroCAD is back on support here, 146.30 after the shoot up to this fib up here, and that's all part of what's happening in the euro. Okay, so keep an eye on this one. It's not my preferred because I'm a little. I'm a little reluctant to buy Canadian dollar, but from a pure technical point of view, if you start to break below here, we could be on our way back into the 145s. But there are two much more interesting ones, and there's two that some of us in the room are in as well. Is the euro antipodians. We've seen this end of month shoot higher, and quite a few of us were prepared to give it a shot short here in the Euro Aussie and the Euro Kiwi. And good is to know that we had a bit of a retest higher and a sell-off now. This is what we were talking about in our room, what we were expecting it to do. Okay, this is also risk is doing a little bit better. S&P 500 is going up a little bit. Gold is coming off. A little bit. The mix is doing a little bit better. The oil is somewhere a pressure instrument as well. So the pressure is the pressure is coming out of the pressure cooker a little bit as well. This is all normally quite good for the antipodians. They are very risk-driven currencies. Okay, so I think the end of month there back into the channel was a bit of a fakie, and I reckon we are going to stay offered around those in the 167s. Okay, it goes above 167 3/4, 168, I'll be out, or perhaps even already above those prior highs. But in the meantime, we've already managed to slice and dice a little bit of this cross, and it's going pretty well. And the Kiwi was a bit of a bet, and actually this one, I was looking at the Kiwi to come in as a resistance around 182.5 and up to 182.80, even with a little overshoot. We had the move in the end of month, and actually the end of month move undershot this level a little bit. So I thought I missed the opportunity, but then I said, okay, let's get a small weaker New Zealand labor report, which we did get. And lucky shot, I got triggered into one here, and now I've already started to manage a little bit of this Euro Kiwi, and but it continued to go lower. So these are the two main ones of those Euro crosses, together with possibly Euro dollar, depending on what's happening this afternoon, where I think we could see the Euro finally start to trade its own shitty data that we have seen coming out over the course of the whole of October, really. Right. Now, what else? Any other questions that you are having here? Why every big bank is indicating parity in euro dollar, which can turn dollar sentiment on US data with inflation stuff, where war stands in gold. Okay, yeah, I spoke about gold. Parity in euro dollar. Yeah, there's a few calling for parity in euro dollar, but one step at a time, Ali. Okay, we know, and we've already seen that there were a lot of reasons to hammer the euro dollar, for instance, already earlier in October, and it didn't happen. So we always have to break levels first, and to break levels you need flows. Okay, and if the flows are already mostly done, you're probably going to see a range develop at some stage. To break those big levels this afternoon, we are going to need data out of the US, which are such that the dollar is bought effectively. That's not an algo move. That's not us retailers. We need real flows that buy dollars, right? To break those levels, and then we can start to look at where those levels are going to take us. So one step at a time for everything. All right. I guess you meant gold, Ali. On the central banks are purchasing gold heavily, not gilt, gold. Yeah, that's the news that has been, and China in the lead again, which we saw. The World Gold Council brought out its report yesterday. Yes, China has been a big driver. It's been a big driver on the whole rally of gold, really, because it's their way of parking money that they don't really want to park in the dollar because of the geopolitical tensions and stuff. They have been a big driver. But then the latest gold rush has been driven by also geopolitical Middle East stress and stuff. Okay, so if the market judges that that stress is a bit warranting a little bit less of protection, then you should see gold correct a little bit from those big levels. Guys and girls, trade safely today. As I said, there's an avalanche of things coming towards you and towards all of us today. Um, it should move. Okay, there's enough stuff happening today to make the market move. All right, I've said you what I'm going to look at, what I'm going to prioritize as market movers. Keep it sensible. Trade with a lot of caution as well. Don't overtrade. If you're in doubt, stay out, or at least reduce your risk, okay? I don't want to hear any horror stories when we do the show tomorrow morning. Have a good day, trade safely. See you tomorrow. Bye, guys.